Market bubble. Imagine everyone's obsessed with a toy and keeps paying crazy prices for it. Prices go way up just because everyone wants it. That's a bubble. But here's the thing. Eventually people realize, wait, it's just a toy. And pop. The price crashes back down. Market correction. This is the market saying, okay, prices got a little too high. Let me fix that. It's like a haircut, not a complete disaster, just a trim. Dead cat bounce. Okay, don't worry. No cats involved. Imagine you drop a toy from a building. When it hits the ground, it bounces a tiny bit before staying down. That's a dead cat bounce. The market crashes, bounces up a little, giving false hope, then crashes again. Brutal, I know. Black Swan. A black swan is something totally unexpected that nobody saw coming, like a global pandemic shutting down the economy. It's rare, shocking, and the market goes nuts. Bull market. Bulls thrust their horns up. When the market's bullish, prices are going up. Everyone's happy, money's flowing, people are buying. It's the best time to be investing. Bear market. Bears swipe their paws down. A bear market means prices are falling. People are scared, selling everything, and the vibe is not great. Climbing the wall of worry. Imagine you're climbing a wall, but everyone's shouting scary things at you. Economic crisis. Inflation. War. Despite all the bad news pushing you down, the market keeps climbing up anyway. That's optimism overcoming fear. Market rally. Woo, the market suddenly shoots up. Everyone's excited again and prices are bouncing back. It's like the market caught its breath and said, actually things are going to be okay. Market shock. Something unexpected happens, like a big company goes bankrupt or interest rates change, and the market freaks out for a bit, but it usually settles down eventually. Cash is king. When times are scary and uncertain, guess what people want? Cold, hard cash. Not stocks, not crypto, just money they can hold. Cash wins when everything else looks risky. Money flows. Imagine money as water. It flows from one place to another. When stocks are hot, money flows into them. When bonds look better, money flows out of stocks into bonds. It's always moving. Safe haven. When the world's scary, money runs to safety. Gold, government bonds, Swiss banks. These are the safe havens where nervous investors hide their money. Flight to safety. This is panic mode. When bad things happen, investors literally run from risky investments to safe ones. Everyone's moving at the same time. It's like when you hear scary music in a movie and everyone sprints for the door. Risk appetite. Do investors want to take risks? If yes, then they're hungry for profit, which means high risk appetite. If no, then they want safety, which means low risk appetite. It's literally how hungry investors are for gains. Golden goose. A golden goose is an investment that keeps making you money forever. It's the perfect thing. Rare and valuable. Everyone wants it. Pump and dump. Sketchy traders hype up a worthless stock. Let's pump it. Everyone buys thinking it's great. Prices go up. Then the bad guys sell everything. Dump it. And regular people get stuck holding worthless paper. Don't be the bag holder. The bag holder. The person left holding worthless stocks after everyone else bailed out. You're literally left holding the bag of garbage. Sad. Falling knife. A stock that's dropping fast and keeps dropping. Investors say, don't catch a falling knife, meaning don't try to buy it just because it's cheap. It might keep falling. Market whales. Whales are massive investors with huge amounts of money. When a whale moves, the whole ocean moves. Their trades can shake the entire market. Liquidity crunch. Imagine you need cash right now, but nobody's buying what you're selling. You can't turn your stuff into money fast enough. That's a liquidity crunch. Cash is locked up and the market freezes. Liquidity flood. Central banks pump tons of money into the system. Money is flowing everywhere. Cheap loans are available and everyone's got cash to spend. It feels great until inflation hits. Liquidity trap. Interest rates are basically zero. Nobody wants to borrow or invest, and money just sits around doing nothing. The government can't fix it. It's stuck. Asset freeze. Suddenly you can't sell your stuff. Banks won't buy. Markets shut down. Everything's frozen. Panic. You're stuck with whatever you have. Financial contagion. When one company or country goes bankrupt, it spreads like a virus. Other companies that owed them money go bankrupt too, which affects more companies. Boom, boom, boom. It spreads everywhere. Market meltdown. Everything is falling apart at the same time. Stock market crashes, bonds crash, everything's chaos. Remember 2008? That was a meltdown. Dry powder, money you're saving and not investing, waiting for the perfect moment to jump in. When the market crashes and prices are cheap, you use your dry powder to buy. Smart move. Capital flight. When investors get scared, they pull their money out of a country or market super fast. Whole countries can lose billions in days. Everyone's leaving at once. Debt overhang. A company or country owes so much money that they can barely function. The debt is like a giant weight on their back. They can't invest in new things or grow. Economic headwinds. Invisible forces pushing against you. Rising interest rates, inflation, trade wars. These are headwinds making it harder for the economy to move forward.